All right, what's up, guys? Today is Friday, the 6th of January, 2017, and we're just gonna do a quick test right now. So basically, what I did was I removed the PC sounds from the recording. So I'm just gonna scalp out one contract really quickly, upload this, and boost the audio, and we'll kind of get a feel of what it's gonna sound like from here on out. But pretty much what I'm doing is I'm taking, this is a second entry long. It's also a failed break beneath this little mini range, and it's right off of our trend line, and essentially we confirm our trend line right here. And in addition to all of that, we also have a fair amount of support running across here. Initially it was support, we broke beneath it, it acted as resistance, and now we're just going to treat it as a form of support. Hopefully I didn't get in this too early. As you can see, the move down is kind of strong, but technically I have a break of my trend line right here and then a push down to a new low. So what we could do is we could push up a little bit higher, turn back down again and bounce off of our trend line for a higher low. But I'm thinking that I'm relatively safe with my stop down here because I don't think we're going to push any lower. Then again, I could be wrong. This could turn into a failed second entry long right off the EMA, turn down and trap us out. So yeah, that's pretty much what I'm looking at right now. Just looking to scalp out one contract at 4 ticks, and it should be a quick, easy move, because usually when you break out of little mini ranges and areas of congestion and overlap, you're gonna pull back and retest it, and we haven't pulled back to retest this area yet. So I'm thinking that we're gonna pop back in a second and test it. So yeah, put the line on there so you guys can see that a bit clearer. And yeah, this is my trend line working down. Let me play with this trend line a little bit, make sure that everything is cool. I don't think that's right, but we'll see how that fits. I don't think it's right. No, it's not right. So I'm thinking that the way we had it is correct. I think that this is it right down here. It's hugging these closes, and this is a little mini swing right here. So you can count this as your first 2 swings. You get a break, close outside, and then you get a push down to a new low. And then we have a big bullish reversal bar right off of our trend line and right off of our previous area of support / resistance. And we should be good for another push up to retest the lows of this range. Hopefully we push up high enough to get our order filled. But yeah, that's pretty much it's pretty much it for now. And the trades that I saw so far today, there was a second entry short right here. I actually missed this one because I was waiting for a failed second entry long, or at least a new high on for this short-term uptrend before I shorted it down for a retest of this low. But your second entry short came right here. It was right off the EMA. That was the ideal entry. It took off pretty quickly. It was good for a scalp, and then we bounced right here. I actually got trapped going short right here because I treated this essentially as a failed second entry long. But I'm guessing the reason why I got trapped is because it's really quite important to pay attention to where your swings are located. Because if you notice, we get a pretty significant push up, then we get a slightly lower high, this is the ideal location to short. If you're going short, you want to go short at a lower high, and if you're going long, you want to go long at a higher low. So we get a lower high right here, we push down slightly lower, and then we bounce, and then we push back up again, and we get a higher high than this previous swing high, which essentially for a short, you kind of want this to be lower. You want to see consistent lower highs and higher lows whenever you're trading in a particular direction, because that kind of confirms the trend and the overall bias is in that direction, if that makes sense what I just said. But basically I got trapped right here. I went short 1 tick beneath this, and the ideal spot would be to see this be slightly lower and to have this be beneath the EMA. So it turned out to be a trap. And yeah, it went against me pretty quickly, so that sucked. And then this is my second trade of the day. It looks sketchy. If you look at it this way, it looks sketchy with all this selling, But if you know overall what's going on and why prices are most likely to pull back, and as you can see, we did pull back and we retested this. Now I'm just hoping that we do continue slightly higher back inside of the range, because we're coming off the bottom of that trend line and we didn't make it up to the top of our trend line. Not 100% sure if this trend line is correct, but it's off of the first two swings, and then the midline fits, and basically I just took a measured move between what was the top of our range and all right, so we just got that order filled, so that was good for a scalp. But essentially all I did was I just drew that trend line off the first two swings, and then as you can see, we were bouncing off the tops right here. That was initially where I put the line, and then when we broke out through the top of it, I just went ahead and stuck a measured move up top there. So we didn't quite make it to the highs of our trend line, and we also didn't make it to the highs of our range. So yeah, that's pretty much it. This was good for a long. It's a second entry long. You have your first attempt to go higher right here. You break lower, then your second attempt to go higher right here. Nice bullish reversal bar right off of the EMA, not the EMA, right off of the trend line. And it's also a failed break beneath this little mini area of congestion. You also have a break of your short-term downward sloping trend line and a push down to a new low. It's also right off of this previous support and resistance area, and it's essentially a retest of the failed breakout of this area as well. And one thing that's kind of important to remember is that all prices pretty much want to do is they're moving to test certain areas. So if you have an area of support or resistance and you break out from it, most likely prices are going to move to retest it, and that's pretty much all they do. If you have trend lines, prices want to move to test it, and if you have breakouts, prices want to move to retest that. So hopefully that was helpful. Hopefully that makes sense, but I don't want to make this video too long, so I will see you guys next week. Once again, this is JR, and I will see you guys next time.